Hello traders, hello everyone, my name is Gregor and welcome to our new video surfing daily twice where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the euro, cable, gold, dollar, yen, S&P 500 and quick look at dollar versus Mexican peso. Now, as you know, we have the ECB meeting today, so what we are seeing is speculations on a hawkish ECB. Of course, there is still their inflation target is still far away, especially if we consider where the rates are. So in my opinion, this is something that is driving currently euro to the upside. We also have seen very interesting reversal to the downside on the US yields due to speculations that maybe Fed is going or moving to the final stages of their hawkish policy. So this is something that weighs on this euro dollar pair, which so far is recovering very nicely. Notice that we have for now 3 waves of decline of recovery from the lows. So we are tracking wave C or wave 3. The most important is that both legs, wave C or wave 3, should be made by 5 subwaves. So if you look closely on these recent developments, well, it looks like that this 5-wave recovery is still in the middle of its development. So it means that more gains could follow. Watch out for potential pullbacks. First support could be here around parity, very strong level. So now when we are above parity, this was somehow pivot level. So trading above this means that traders are most likely going to see or look for more upside. Ideally, at some point we are going to see a retest of this 102 level, which was a swing high back from mid of September. So for now we are looking to the upside, at least on the intraday basis here, as long as the market is holding these prices above parity. But in validation level, let's say to turn bearish again, you would need break of 98.70. So for now, I think that euro dollar is still in a very nice recovery. Now looking at the pound, we have seen some very nice and strong bounce away from this multi-year trendline support. I'm tracking a very big wedge here. We've been tracking this capitulation quite closely, and we said that normally after a very strong and sharp drop with a few percentage in just one session, normally this will very quickly stabilize. And this is happening right now. What we are seeing is a very nice recovery here. We are now recovering after hitting 1985 lows, and now we are even back above 2020 lows. So I think that there can be room for further upside. And if you look closely at this price action, you can see that that was a very strong drop, and normally when you have such a strong drop that is fully retraced by the following recovery, well, this means that the bottom has most likely been formed, especially when you can count 5 waves to the upside here with the recent price action come higher into wave 5 out of a triangle. So there can be some resistance in the near future around 1.1735, but eventually I think that there can be more upside coming on pound after the pullbacks. The support, of course, on the next higher degree pullback would be at 1250 and obviously 1070, which is also this swing low here. Now let's take a look on gold. Now firstly on gold, I still think that on a big picture we are in a corrective phase, but normally these corrections will be very tricky, especially when you have this first leg in 3 waves and the second leg also made by 3 waves. So in such case can be even complex correction like a flat, expanded flat, can be a combination, can be even sometimes a triangle. But since market moved to a new low here beyond the ending point of a wave A, I'm looking this to be wave C that is already been made by 5 subwaves. Well, maybe still one final part here of this decline is missing, because I'm tracking here, let me label this one, I'm tracking here this 5-wave drop with an ending diagonal here, with an ending diagonal in wave 5. So looks like that we could be seeing the final leg to the downside now. So watch out for potential 1600 to be retested before market may finally turn back to the upside. Here's also the 4-hour chart. As you know, each leg in ending diagonal should be structured by 3 waves. So that was the first 3 waves for wave 1. then you had sharp wave to rally, then we had another complex decline, could be even labeled as a WXY down, and then we had another wave 4 rally. And now, of course, if each leg should be made by 3 waves, then, or at least in 7 swings, then obviously we are missing another leg to the downside here, because this was a very strong drop, looks like an impulse. Now you are in corrective wave B, so watch out for final push to the downside, then possibly retest of this trend line, and then a reversal higher. Of course, everything, not everything, but a lot will also depend on the US notes, US yields, especially next week when we have the FOMC decision. Now let's take a look also on dollar yen. Now dollar yen is trying to stabilize here with the recent volatility after very strong recovery here back to 1998 levels. Now, and notice that this current very strong move to the upside is somehow similar to this previous wave A. So if we respect the price action, then and fib levels, of course, and even those resistance levels, and on the other hand also interventions, then obviously we should be aware of potential resistance or even lower price action here. Notice that I can even count within this subwave C, I can even count 5 subwaves very nicely that recently stopped at this projected fib level. So I think that there can be a period at least of the temporary consolidation. Looking at the 4-hour chart, we also came down here below this trend line support. I know that so far this has occurred only with 3 waves, but if we consider that this was a very important trend line that is broken and that former wave 4 is still far away, well, I just think that there can be even more downside after any near-term rallies. If you want to look for more upside, potentially even for some longs, then obviously just keep in mind that there can be a new intervention if price would recover significantly again, and definitely you want to see this 149.65 broken to make sure that we are going to see a retest of the highs here. So my personal view is that we either just stay sideways here for some period of time, or maybe even we are going to see more weakness. I just think that that bulls are now were put on the sideline, especially because of speculations are stepping out from longs due to this plenty of interventions and talks around this yen weakness. Now let's take a look also on the S&P 500. Now the S&P 500, as I talked last time, so far we still have only 3 waves to the upside into moving back into this very important resistance. We don't know if this is going to be a corrective recovery, or maybe we are going to see more extensions to the upside that would confirm that this is a wave 3. In such case, I would love to see this 4,000 level. So for now, that's still not the case. You are at the do-die zone. Either we fall from there and broke this trend line, which would put risk of back in play, or we see a break above that level with an extension towards 4,000, which means that we are most likely then trading in a wave 3, and more upside would then be expected after next pullbacks. So it's a very neutral zone for the S&P 500, and this tricky price action, I believe, can last till the next rate decisions in the US. Now looking at the dollar Mexican peso, we have recently seen some weakness, but looking at this basic technical chart, we are still just trading above this potential neckline, which I want to see broken to see more weakness, possibly even back towards these pandemic levels here around 1845, and then even possibly in 2023 we can retest 1730 or 1750 around there. Why I'm looking towards these levels, simply because that was a very nice and strong 5-wave drop. Now we are just consolidating, moving sideways, so I think this is a triangle. Just as I said, we still need more decisive break to the downside. I think that 19.70 could be a real trigger for potential volatility and strong momentum that can drive prices back towards these pandemic levels. Traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon. Bye.